Hmm. ARB on GME didn't resolve today. It's gonna go up more tomorrow. Probably. Hmm. Interesting. Alright. Well, that's weird. Had those. Okay. Those are moved. So nothing today. We tested gamma neutral, and that was kind of it. Kind of closed flat on weekly GN. Both seem to have a problem getting through this band of resistance here. ES pretty close to the overnight high, coming off of the half day, running into a lot of resistance around 6100. The consolidation trend failed, but we're still in an uptrend following the bounce on 6064 earlier today. We'll see if the trend fails. We lose that 6078 level. Breakdown would confirm at a loss of 6040. If we continue to find support, I would expect that we'll probably push up into the trend line. And that's around like 6145, 6146. So, yeah, a full reversal from our prior drop, but still in a bear rally for now. Dollar fell a bit into the end of the day with a lackluster 7-year auction that didn't seem to produce a higher yield. That also saw a drawback in the 10, 20, and 30-year yields. We saw those fall a bit. Dollar came down, but not much. Still relatively flat on the day. It was a crazy spike in commodities that fizzled out. Gold and precious metals on the rise. A little bit of agricultural commodities up. Oil's down. Correlation kind of bottoming out over the last couple of sessions. 1 month correlation still maintaining that spread on the 3 month correlation. We're not seeing 1 month correlation fall significantly below 3 month correlation, so near-term bullishness is near-term dispersion isn't really as leveraged up as you'd think it would be with the market trading where it is. Leverage on the carry trade at the 10-year crossed over all-time highs earlier today, and fell back a little bit lower into close with a drop in the dollar. 8.95x, which is still higher than the historic all-time high. We've got to be getting fairly close to the maximum leverage we're going to see in this, especially with the Japan decision coming up next month, which they're very likely to raise rates. Forward yield on volatility negative 7.95, but up a little bit today. Turning around a little. We saw VIX rise both on the 30 and the 3 month windows. Bond volatility picking up 9.6. We're starting to see move climb, but we're not seeing the correlated move in core 3 month. So watch out for that. If we continue to see bond vol rise, we should see a move up in 3 month correlation as well as longer dated dispersion falls off in favor of near term yields. Skew is at 180. This isn't updated yet, but we'll see what it looks like a little bit later today when it updates. I think it updates at 4:15 or 5. I'm not sure, but when it updates, I'll post it in the Discord or something. Same with the 20-day moving average. It doesn't look like we're going to see much of a change in breadth, honestly. I know we saw IWM pick up a little bit today, up 93 points at the end of the day, but Dow only up 12 and NQ down. So we're getting a little less push into tech. It's probably getting capped out. And so we're seeing a little bit of money come in, like in small caps, mid caps. I don't really know how much that's gonna do for the market as a whole, but Dow's been down pretty bad over the last like month. So, we're at least seeing some recovery there. Nothing really significant. Correlation with VIX is falling off as we see continued vol shorting over the last 4 sessions now. Watch for that to turn around, obviously. If we start seeing that tick back up again and correlation between the two becoming stronger, that's generally a fairly good sign that we're going to see a move in volatility. Or at least participants are expecting a move in volatility, and it's kind of self-fulfilling. Fed fund futures pricing in a bit more than they were in the earlier part of the week. 0.2 rate cuts at the end of today. Still kind of chopping around under one rate cut by June of 2025. So no significant moves here, but a little one at least. So we don't have any inflation data for a couple weeks. So things are likely to calm down. This one's kind of important. The 10-year 2-year spread still quite wide. It fell a little bit today, but still positive 0.25, and the bear steepener is still continuing to get worse. Even with the kind of miss on the auction. On the daily here, we have bounced back above the EMA 30. We're testing the lower trend from where we broke down. Let's extend that out to here. We closed below it after testing it today and failing. This is basically a full mean reversion, both on the technicals and on the options data. So we're gonna kind of have to see where we go from here. If we get a bearish close tomorrow or fall back under 6,000, that would go a long way to confirming a continuation of the downside that we saw last week. If we break back above the collar, we'll probably hold there until end of quarter. So I would say that tomorrow's price action is going to be pretty important. Nvidia? Yeah, I could take a look at Nvidia. Nvidia's still got a shitload of resistance at 140. There's a massive wall of sold calls there. It's just been struggling with that for like a little while now, ever since it fell below it. It's kind of forming a bit of a reversal. Maybe a retest back at like 133 would better set it up for a move to the upside. Like retest 133 as like into OPEX as those 140s fall off. But if it does gain ground on the 140 calls, it can squeeze them out and push up above them, which isn't impossible. Anyway, that's about it. Thank you guys for tuning in. I will see you tomorrow morning. I hope everybody has a good night.